And today is June 4, 2025. The Nikkei index is surged and currently sits at 37,831 yen. I'd like to start by looking back at the US market from the yesterday. And the S&P closed at 5970 point, up 0.58% from the previous day. For the first time in a while, the VIX or the fear index has dropped to 17.69, showing a sign of the relative calm. Compared to Japan, the US market still has not shown significant weakness in EPS momentum. US interest rates are high and earning growth remain strong, especially when looking at the valuation like PER. The US seems more reasonably priced. On the other hand, Japan's EPS has been weakening, and interest rates are rising. And historically speaking, and Japanese EPS growth rate has been lower than the US. Considered this. I'm skeptical whether the much more upside of Japanese equities, although the current rally seems tied to US market trends. I can't shake the feeling that this rise is irrational. Perhaps I'm wrong, but that's how I feel. The yen is also stretching, and overall, I believe Japan's stock market is reaching an unstable high. Gold and Bitcoin miserable seems to be undergoing a period of time-based adjustment. At the moment, my main focus is on Japanese stock. They've surged but are now pulling back slightly to 37783 yen. Even if Japanese equities are moving in tandem with the US from fundamentals perspective, it feels unstable. Japan appears to be trading at a significantly high valuation compared to the US. I firmly believe it's wrong to have a bullish stance on Japanese stocks at this point. Lately, I've been reminded of Michael Burry in The Big Short, questioning why the market is not falling and feeling like the market is wrong. That's exactly how I feel about the current Japanese market. When looking at the supply-demand balance, buybacks of Japanese companies have been massive and are likely supporting the market during Japanese trading forwards. Previously, there was strong buying during Japanese market upwards, but recently we've seen the declines during the day and recovering overnight, indicating a potential shift. It's unclear whether corporate buyback remains as strong as before, and there's a lot of noise. These buyback might be destroying the market globally. We are seeing buyback at historically large scale, which could be scaling market dynamics. Bank of Japan Governor Ueda mentioned yesterday that current bank's stance on interest rate has not changed much compared to last year. However, I sense a slight shift, a strong resolve toward normalized monetary policy. Given this shift in policy tone, I think we need to be cautious. Watching trading volume and some strange patterns are emerging, market making the markets feels uneasy. Honestly, I don't want the market to crash, but based on my models, I feels like we've hit a peak. Some may argue the market is anticipating lower interest rates, but with weak EPS momentum, I believe strong rallies typically happen when rates are stable, earnings are solid, and sentiment is not overly bullish. And that's not the case now. Overall, I find the current market conditions troubling. That's all for today. If you enjoy this content, please consider following my podcast Long Put Strategy. See you tomorrow.